Hi, Patrick Reed from the Adamas Principle. We've got some headlines for you this week. Jay Powell, right? He was talking at the New York Economic Club. Now, the key thing that really I had to take out, he was citing a very bleak jobs future in the US. And, the silver lining we had on non-farms, which was basically the unemployment, it was 0.4 lower at 6.3. Expectation was 6.7. He basically said that should have been around 10, right? So the headline was a miss. The revision the previous month was a miss. So all in all, not a great area, not a great jobs figure. So the other thing is, I certainly got a sense that he didn't feel that higher inflation would cause any disruptions to the jobs overheating. So that in itself basically put a light under the risk on bulls, and didn't really have much movement on the dollar. However, it certainly put a pragmatic and a reality to all of these dollar bulls. Okay, so let's crack on with the first chart. Euro dollar. You can really see this area just shy of 121.75. Very key level here, but we're capped at 121.40. This 121.39, 121.40. We broke on the 4 hour this 121.0. It's around 121, 10.15. And now we're looking to fully test this 120.55. So looking, are we, the dollar's been hit across the board, for the last few days. Is this enough? Is this the time for the reversal? But one thing I will say is this, around this 119.50 area, this is key on the daily. You can't see this on the 4 hour, but on the daily, it is a key area because it could potentially see a trend change, not dollar squeeze. So all in all, we're looking like we're ranging. We could potentially, if we crack 120.55, we might see the new lows at 119.78. Next chart. My favorite pair at the moment, only because I really like trend lines, and 77.65, very nice. And, we've cracked below that. You can see the dollar turning. Risk at the moment is looking a bit wobbly. So, this all makes sense. But we really need to crack 76, 78 for those bears on the Aussie to really start rubbing their hands with glee. And the next chart. Dollar yen doing what dollar yen does best. At the moment, it's going higher on dollar news, not risk news. And, yields really not too shabby. I think we spent long enough on the 10-year above 1% for us to be pretty confident of this base for new levels higher. I think 2% and 2.5% on the 10-year are pretty decent levels. You probably get some kind of pause there. All helping the cause for a dollar yen higher. And then finally, dollar CAD. There you go. Today, a bit of risk wobbling, dollar higher, oil off the highs, obviously, and dollar CAD, the first to spike higher on a risk off scenario. That said, we really need to get to 128.14, 15 for a potential pause, and you might expect sellers to turn up there. That's it from me. My name is Patrick Reed, Adamas Principle.